Good morning and welcome to GrainTV for December 20th, 2011. To my left is Logan Burgess and I'm Brock Shimbano. We rallied higher yesterday in the grain complex, sparked a great deal by year-end position evening and drier than expected South American weather. And in the overnight we saw this pattern continue. We saw corn up 2.5, soybeans up 5.5, Chicago wheat up 5 3/4, and Kansas City wheat was up 5. Logan, we had an exciting day on the board yesterday. Why don't you take us through yesterday's price action?
Yeah, Brock, as you're saying, it was really exciting. It was really interesting, some of the price action that we saw yesterday in Chicago. You can see that for most of the day we were trading between the 594 and 598 level. As you said, that news came across the wire that South America was going to be drier and hotter than was initially expected, and we saw some real buying come into the market. It actually pushed the March corn market back above $6 here at midday. We sold off sharply coming into the close, but the last bar we printed here, some sharp buying, and we actually closed above 6. We saw a little bit of confirmation of that in the overnight session with corn up 2. Brock, I guess, we saw some buying come in yesterday, but do you think this is sustainable? Do you think we're going to see this moving forward?
I think for the time being we are going to stay above that $6 level. We are gaining some support fundamentally from drier South American forecast. Could hurt the corn and soybean yields there. And we're also getting support from a sharply lower dollar index this morning. Take a look at FireTip, our dollar index chart right here. We have sold off sharply today. We're down about 0.7% on that dollar index, approaching that 80 level once again.
Yeah, Brock, you see 80 just barely hanging in there on the dollar index, and it's really helping out U.S. grains here this morning. As you can see, we've opened in Chicago, corn up 3, soybeans up 4, and wheat's trading up 4 to 5. Brock, really seeing some more buying come into this market as that dollar index takes its foot off the gas.
Yeah, it's nice to see that dollar index sell off a little bit, support these grains, possibly help our export market going forward. Let's take a quick commercial break and we'll come back to talk some longer-term technicals.
Well, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Welcome back to GrainTV. Brock, earlier we took a look at short-term price movements in the March corn contract, and we've seen 2 days here of buying. What are we seeing here long-term here for the corn market?
Yeah, let's take a look at what the March contract is looking like on a daily chart. Over the last couple months, we all know we've been selling off pretty sharply, but I have found an interesting formation starting to form in this March contract. It's called the bear flag pattern, and there's basically 3 key components to this. First is the flag, which we saw develop about a month ago. We saw a large sell-off from about 650 down to about 575, forming that flag pole. Continuing through time, over the last couple weeks, we've actually consolidated from about 580 to about 605 in a tight, narrow range, forming our flag of that bear flag formation. And it's interesting to note that we've actually been doing this on decreasing volume through this whole consolidation period. A couple of key components there. But if we do break out below this, what is going to be our downward projections? Looks like it's going to be about the same size as the original sell-off. So if we end up there, we're going to be down at about 550 to 545 area or so. I'm looking for 550 to have support if we break out this flag pattern.
Yeah, Brock. Well, kind of on top of that, on Friday we saw the Commitment of Traders report come out here, and it really looks like managed money right now is banking on this corn market, making a move lower. Take a look here at this graph. Managed money now holds over 100,000 short positions in corn, and we haven't seen this in a long time. Take a look here at another graph that displays this a little bit differently. It's the long to short ratio held by managed money. Here on the vertical axis, a 10 would represent 10 long contracts held for every 1 short position. Back in August, we were around 9 long contracts for every 1 short position, and recently on Friday it came out that we're now approaching 2. So they've really taken their long positions off the table and are actively adding short positions. So it's just kind of an interesting side note to where managed money is looking for this market to go. One more thing to consider, though, is that with this large quantity of short positions held by managed money, how do they get out of these short positions? They're going to have to be buyers in this market. So it could provide some support here moving forward.
Make sure you get a hold of us by the end of the month. We're still running our holiday special. If you open an account by December 31st with us, we're going to give you 10 free trades for the whole month of January. Follow us on Twitter. Check us out on Facebook. Give us a call at 877-GRAIN-07. Take a free demo at grainhedge.com.
Have a good one.